Hello and all loyalists, and welcome to my very first video here in this channel, none other than crypto. Now I must admit it's kind of a corny name, but it kind of fits the motif of the none other than, because it's actually my gaming channel right here. I mostly do like RPGs like Persona, RPGs. There's a whole variety of different games that I used to play on here. But I recently made a video going forward, new ideas, a new channel. And because like recently I've been kind of getting to the investing mode, but more so in the crypto investing world. Now I actually been investing for a very long time, so kind of a little backstory about myself before I get into the title of the video. But to kind of explain who I am and where I come from, I've been investing for about, I want to say, maybe 6-7 years, about that time frame. But I was really scared of investing at first, and if it wasn't for my friend Nomis, who pretty much gave me a lot of advice and what to kind of look for and stuff like that, I wouldn't be investing at all. And I always get like little advice here and there from my friends, my new friends that I get like recently, about because they know I'm an investor and stuff like that, and like, well, what to invest in, who should I invest in, is it worth getting into crypto, is it gonna crash, etc., so forth. And they kind of ask me for my advice, and generally I have a good idea, but obviously anything can happen in the world of crypto, and anything can happen in the world of stocks as well. But I still want to make it kind of a vlog journal of where I come from, what I do. And obviously you don't have to do anything that I do, you can just follow me. And if there's any questions that you might have for a future video, you can always ask that in the comments down below. But this is pretty much my journey. I'm not a financial advisor, so I can't really give you like, oh, you have to do this, you have to buy, you have to sell you. So never really take my advice at face value, or any YouTube for that matter. So basically it's always good to do your own research and know what kind of risk you want to take. Now this is kind of like what the point of the video is, to kind of find out what kind of investor you are. I think this is a pretty good starting point in terms of video, because that's always the question I always ask anybody that asks me questions about if I should invest or not, is what kind of investor are you? Now, are you a high risk investor? Are you kind of halfway medium investor, or do you want to start slow and do low risk stuff at first? Now keep in mind too, not even though it might be low risk, it's not always going to be guaranteed growth. There's always going to be that risk involved. You could still lose everything. But the number one advice I can give you, or anyone can give you, is be willing to invest in what you're willing to lose. Meaning, let's say you have $1,000, and that's all you have. That's like your checking account or your cash, whatever, is only $1,000. Never go ahead and invest everything you have. Always invest in what you're willing to lose. Now, for that example of $1,000, it's always good to invest in possibly 10%, so like $100. And work your way from there. For me, how I started is, when I first started, I started slow. I started doing like CDs, which is not really a risk at all, because it's guaranteed compounded, and you get your capital back after a certain amount. So I started there because I was really scared of like losing everything. But that's a good starting point. And then of course the next step from that is probably going into like stocks. Now stocks is usually divided into like ETFs, exchange traded funds, or you can go into more like mutual funds if you want to go a little more low risk. And of course, if you want to do individual stocks, which could be a little more touchy. But if you have enough research involved, you can definitely get involved with more individual stocks. The more questions I get, the more I can like answer, because obviously investing in general is a very broad topic. So you know, there's so much things you can go into more detail with, but the number one question, like I said before, is to know what kind of investor you are. Let's go into this little PowerPoint that I made, very short PowerPoint, to kind of, you know, find out what kind of investor are you. Now, this kind of reminds me of this song from like, what kind of Pokemon are you? But yeah. Anyway, but that's kind of like what this question is about. What kind of investor are you? Now, if for some reason you don't like the background or something like that, I can always change it for a future video. But you know, it kind of looks like this Spider-Man skin, but yeah, I kind of like it though. It looks really cool. But anyway, enough rambling. Let's actually get into this. So what kind of investor are you? Number one is playing it safe. Now this is more of the low risk, you know, generally the lowest possible risk. They don't want, they're either starting out, they're either looking to get their foot a little bit wet. Maybe they have, you know, some extra income that they're willing to, you know, invest in. Now, generally, this is the lowest return on investment, but it's a good starting point for anybody that's willing to just get started. Now, what kind of examples are we talking about here? Like, obviously, like I said, this is a good entry level if you're new to investing. But general starting points, it's either ETFs, exchange traded funds. Now, for those that don't know what that is, think of like a tech ETF. It basically combines hundreds, maybe in thousands of different companies into a stock, an ETF. And it could be combined with Amazon, it can be combined with Apple, Google, and there's probably thousands upon thousands of companies in there. Now what's good about those is the fact that if one company, for example, gets bankrupt for whatever reason, it's not going to affect the entire ETF. And usually the guys that manage the ETFs, usually brokerage, yeah, those guys, they're the ones that kind of manage it for you, so you don't have to worry about you know, the selling and buying as a day trader or anything like that. So if one company gets bankrupt, it is usually replaced with something else. So those are usually pretty positive, and you never really lose that much money, but you also don't gain very much money. So also keep that in mind. Other things is mutual funds. That's actually much safer than ETFs, but the big disadvantage with ETF, the biggest disadvantage with mutual funds in comparison to ETF is usually there's a minimum balance. With ETF, there's usually not a minimum. You can buy at least one ETF, and you get like a small, a very small percentage of the company. And obviously, the more ETFs, the more percentage you have, but you never have a full amount unless you go individual stocks, like individual Amazon, individual Google, whatever the case is. But mutual fund, it's similar to ETF, but there's usually a minimum balance, and usually the growth is a lot slower. But those are more good for like retirements. If you're trying to get into like a retirement program and just hold it until you turn like 50 years later, and that's the only time it's really good for. And another thing with another difference between ETF and mutual fund is ETF usually you can it goes up and down during the trading day, and there's usually a good time. You can find out when's a good time to buy, if it's like negative, or a good time to sell if it's positive. Whereas a mutual fund, you don't know if it's a positive or negative until the end of the trading day. So that could be a bad thing if you're trying to possibly buy in the next day or sell the next day. So it's not really good for day trading. It's usually more for holding and forgetting about it. But it's a safe bet though. Another thing is higher name stocks. This is kind of a little bit higher up, but this is what I'm talking about, like more higher names, like big name companies like AT&T, you know, Apple, you know, these are companies you know for sure it's gonna last 10, 20 years down the road. So it's a pretty safe bet that they'll still be around, which means if you buy one Apple, two Apple, whatever the case is, you'll still have one or two Apple 10 years, 20 years down the road, versus buying a completely brand new company and they could be gone. You never know. So higher name stocks, a little bit higher risk, but it's still, if it's a name brand company, more than likely you'll be okay. And of course I put parentheses in crypto because usually this is not really a good entry point for new investors because of how volatile it is. However, comma, if you want to play a little bit more risky but still play it safe, there's I guess name brand higher end cryptos out there like Bitcoin, obviously Ethereum, Litecoin. These are all based in an app called Coinbase. Essentially a much safer bet because for sure Bitcoin is always going to be there, Ethereum is always going to be there. There's no sign of it really dying per se, but the big caveat to that is because of how volatile it is. If you invest $1,000 right now, it could be $900 the next day. It could be $1,200 the next day, which is good, but it can also be as low as $500 the next day. With a coin like Bitcoin, it's never really going to go all the way down to nothing. But you never know with crypto. You never know. But there's usually a, like, if you ever look at the charts in CoinMarketCap, you notice that it never really goes all the way down to zero. There's usually like a level that it stops in, and it might go back up because people buy more, etc., so forth. But it's still relatively safe bet in holding the higher Bitcoins or higher the higher cryptocurrencies like Bitcoin, Ethereum, and Litecoin. Now next up is meeting halfway. Now these are obviously medium risk, medium return on investment. Now this is usually good for those who are already kind of familiar with investing. Maybe they started with stocks, maybe they started with, you know, they have a general idea how it works, and they're not going to panic sell if things go too crazy. They're not going to like, they usually have a more restraint and able to have a better composure of how the market is going, and they're able to do their own research, etc., so forth. So these guys are generally stocks, cloud mining, cryptos, and parentheses ICOs. Now the reason why I put parentheses in ICO is because those are generally much higher risk, because you never know where they're gonna go. They can, there's definitely signs that you can look into when you look at ICOs. And for those that don't know what ICO is, it's basically the initial coin offering. These guys are brand new companies that are starting out, and they're looking for investors to invest in their company and whatever project, whatever vision they're going for. And generally they're much higher risk, but you can do ICOs if you do your own due diligence and do research and all that. And they're generally there's ways to I've had to go to a future video on how to look at certain ICOs and what to look for, stuff like that. But usually it's pretty obvious to know which is going to be a good legitimate company that's going to last. And but at the same time, it's still medium risk. You don't know if it's going to be there. You don't know if the price is going to be positive or it's going to stay like low for years. You never know. That's why it is a medium risk. Now cloud mining is basically stuff like Hashflare, stuff like CCG mining, Genesis mining. These are all like basically, now this is totally different from actually mining yourself, like hardware mining, because you need to buy the equipment, which is very expensive initially. You can find some maybe cheap or used, but generally you want the best equipment possible to mine like Bitcoins or whatever the case is. But usually what I do is cloud mining. Now cloud mining, you basically rent hardware from other users and they mine for you. You pay a certain maintenance fee if there is maintenance fee. I know Ethereum doesn't have maintenance fees. And generally you get paid back in BTC, Bitcoins, or Ethereum, or whatever you're mining, for example. It's generally medium risk, medium reward, because generally it takes in order to get your money back is usually 3 to 4 months, maybe more, depending on like how difficult it is to mine certain coins. And if there's high difficulty with getting coins, then you generally get a lower return. And similar to what I talked about with, you know, getting Bitcoin from like Coinbase or other apps or whatever, the price of the Bitcoin generally goes up and down, and you never know if it's going to be a good year or bad year. It's always going to be unpredictable. Now, same thing with stocks. That's kind of like the same thing we talked about in the previous slide. And finally, go big or go home. These are generally not afraid to take risks, high risk, but also potentially high reward. And of course, when done right or when very lucky. Now, this is generally good for those who have disposable income. Now, what I mean by that is someone who, someone has a full, like good example. Someone has a full-time job, and they just have extra money that just they don't care what happens to. Now, these can be thought of as almost gambling to some degree, but it's not necessarily gambling, because I actually looked this up recently, like the definition of gambling versus, investing, for example, in cryptocurrency. Usually gambling, when you put money in, you're not always guaranteed money back or coins back. Whereas if you gamble, you're investing money into a company, you get coins back. You always get coins back. Now, the value of the coins may be different. It could be crap coins or shit coins, as they call it, or it could be worth a lot, like Bitcoin, for example. So that's the biggest difference between gambling and not gambling. But generally, these are people that have disposable income. They're able to like invest big or invest in different multi-tier avenues. Now, usually, like I said, multi combinations. It could be combination of stocks, cloud mining, cryptos, ICOs, and I put lending on here. Now, the lending platforms has been a big high risk, also high reward because of the interest rates, but generally those are like kind of have a bad taste in certain people's mouths because of what happened with BitConnect. But generally, especially if you get lending platforms at ICOs, it's quite possible you could get your money back and then some if it lasts. Now, what makes it such high risk is the fact that you don't know if it's going to be there. It could be gone. You never know. Like with the whole exit scam with BitConnect, it was pretty much gone, and everyone was giving these BCC coins that are worth essentially nothing. And those who invested 10,000, 5,000, whatever the case is, their money is now worth like maybe $190, maybe less, who knows. And usually lending platforms provide that kind of high risk, but when played right and early and safely, and definitely not investing everything you have into it, then you could come out as a winner. Now, same thing with ICOs, as I mentioned before, cryptos, cloud mining, and stocks. And usually these high risks usually have a combination of all this, but that with the biggest thing is diversification. Never put all your eggs in one basket, as I've always heard in investing. Always diversify, whether it be having stocks, cloud mining aside for your passive income, your cryptos for your altcoins, holding your bitcoins, investing in ICOs, and of course lending platforms if you're into that kind of stuff. The biggest question for you now, of course, is what kind of investor are you? Are you go big, go home, kind of like in the middle ground, or are you low risk? You know, but that's definitely questions that you should ask yourself before you start investing. Before I conclude, I kind of want to mention what kind of investor I am, so you kind of have an idea of what these videos are going to be about. For future videos anyway, that's going to be about. Obviously, I do cloud mining. I have altcoins that I use. I use Qcoin, Coinbase, GDAX. I also do staking with, for example, I do staking with my Neo wallets. I do staking with the Pivx. And I'm also in lending platforms as well, to include Davor, LendConnect, and I was in BitConnect before that crash, but I'm kind of recovering from that. So in general, I do a combination of a lot of things. Now, when I first started investing in stocks, I started out with roughly $500 to $1,000, and I was able to grow that to $20,000 in a matter of 4 years. And that's from day trading for the first year and kind of holding right now for, you know, for dividends, stuff like that. I started investing in cryptocurrencies right around October, like August time frame. So I didn't get into the big hype because I think the best time to actually get into cryptocurrency was in July or before July, and that's when it really boomed. But I still got it. I still got pretty good gains. I started in around $500, and I'm currently sitting at around 21,000. Obviously, it fluctuates because of the market and stuff like that. But you know, just kind of a little backstory. Obviously, this is my first video, so if there's any critique, any comments, you can always leave it down in the comments down below. If there's any questions that you might have. And obviously, if you guys are interested in any of the things I talked about, whether it be cloud mining, lending, whether it be, you know, getting into Coinbase or, you know, different stuff like that, I'll have links in the description for you guys to check out. These are referral links, so if you guys are not into that kind of thing, I understand. But just kind of make you aware that they are. But I do want to point out though, that even though they are referral links, the money that I get from those go back into helping this channel. And as the channel grows and the more people participate, stuff like that, I actually might be able to do, like, you know, Bitcoin giveaways and stuff like that for you guys. And eventually I hope to do that. So definitely check out the referral links down below if you guys are interested in that. At least register. Obviously, if you're a new investor, I would kind of wait a little bit, do some more research, and obviously ask me a bunch of questions. And hopefully in the next video I can answer those questions for you. But anyway, I'm gonna stop here. Hopefully this is a good video. Make sure you hit that like button, subscribe to this channel, because like I said, the more we grow, the more I can do, you know, Bitcoin giveaways, maybe Ethereum giveaways. You know, I might, you know, spice it a little bit. But you know, this is pretty much my journey in the cryptocurrency world, investing world. You know, that you have questions about or confused about. And you know, obviously I'm not a financial advisor, but I can at least help you out and guide you in the right direction. And that's what I hope to do in this channel and for future investors out there. Anyway, love you guys. Till next time. Stay out. Night. Laters.